Greetings, Algo artisans. Cowboy here, and we're gonna go through a Friday wrap-up of the charts. So let's get into it right now. Okay, we're going to start with Bitcoin here. This is going to be widely a crypto roundup. Bitcoin did fall out of this channel that it was building, and in the live shows, I did mark out these top 3 areas where these 3 lines are. So let me zoom in on that, and these are liquidity areas that I got from the Kingfisher.io, okay? And I did say that if price fell through, they would grab liquidity here, and certainly they did. There is more liquidity down below here as well. I'm not sure how far price will go. I do not think Bitcoin will dive too far. So far, it has fallen about 11% off of its high, and the normal pre-halving pullback is between 20 and 30%. We've already seen 15% back here in early March, and that might have been it. We just may not see it. We may see it. It's hard to say. We do know that the institutions are simply buying Bitcoin with no kind of strategy other than buy more. I mean, I'm sure I'm exaggerating. I'm sure there's some kind of strategy, but pullbacks in price don't seem to matter. So the Bitcoin supply shock is possibly coming. The market is anticipating that, and the price continues up. So the price may simply move back up from here and start heading back up into the 70 some odd thousand range, get into that 70 handle and even go back into this channel might be worth looking at. But either way, price got back up to roughly 72, 73,000. That's when I would start to think we're ready to head back up, 73,000. In the meantime, price could also run down to grab liquidity at 63,000, but I don't at this point see price going much deeper than that. Of course, that can change. Price heads down there. I will take a look at the market and the algos at that time and make a further evaluation. But as of now, that's where it stands. Ethereum on a tear. We're going to look at that next. Okay, so here's Ethereum, and again, this is on the 3-hour chart. I'm going to back out and take a look at daily chart. What we're looking at with Ethereum is basically tracking Bitcoin, and if you look back over time, Ethereum and Bitcoin for the last several weeks have been growing at about the same rate. They've been pacing each other, and when Bitcoin falls, Ethereum falls. So essentially, what we're looking at with Ethereum, I would say the most likely liquidity grab at this point would be down in the 3,000 range, but again, price might not make it down that far. There is a decent amount of liquidity right here in the 34 to 3,500 range. So either price will make it down there or not. And again, if price makes it back up above 4,000, I would think that price is probably going to head up from there. I do have some targets listed out here that are based on older structure. One of them is at about 4,500, maybe 4,400. And then of course you have approaching the all-time highs, 4,790, 4,876. So these are some areas I'm looking at for Bitcoin to reach. And I think this next bull market, whether we see a resumption upwards now, soon, or later after the halving, either way, I think these prices will be breached, and it probably won't take too terribly long for that to happen. For the moment, price is still retracing from its highs, and I'll have to continue to evaluate. Again, it has made it down roughly to this liquidity area between 3,500 and 3,400, and in the bull market, most things get front ran. So if, let's just say, I was waiting for an entry down at maybe 3,000, I probably would expect price not quite to make it down there, much like it happened right here in early March, where price didn't make it quite down there, made it to 3,200, and everybody bought before it could even make it down to 3,000. So this is a typical bull market scenario. Let's take a look at Solana. Solana continuing up. Had I stayed in that trade, it would have been still in profit, and Solana all-time highs are some ways off. I believe it's about 260 all-time highs. 200 handle is important. Let me go ahead and map out where I think price might head here as far as targets are concerned. I think a decent target right now might be around 195, just before that 200, right? 200 is a psychological number, and so we might see some resistance prior to that, some selling off. Possibly, it depends on how bullish the entire market is. If the entire market is just hot, then of course we may not see any kind of pullback and price may continue up. But if the market is kind of like it is in its current state, we might see a little bit of resistance right there below 200. So price could head up there, knock its head, and maybe pull back a little bit. Let's look at AVAX. Okay, so we get to see a little bit of a trade that I mapped out. I did not enter this trade because Bitcoin is still a little bit in, sort of a limbo state. We haven't really figured out if Bitcoin is done with its retracement, with its liquidity grab. And until we do have an idea of Bitcoin and where it is, I don't really care to take high high time frame alt trades. I might scalp a little bit, but the longer the timeline, oftentimes the less predictable it is, at least in the midterm. There's kind of a sweet spot, right? Low time frame, there's like a lower chance of things changing quickly, so price will probably go where it's supposed to go. However, at those lower time frames, there can be noise. High time frame is pretty good for directional. It's actually not that easy to pick high time frame targets, but it's relatively easy with crypto to go along with a 4-year cycle and pick direction. Midterm is kind of the best of both worlds. However, if there is a large event in midterm, or if coin does decide to take a big pullback, then these alt trades can be in trouble. Hypothetically, this trade would be in target, but I did not enter this trade. These targets, I think, are the wise targets to take. Maybe a little bit lower than 64.48, maybe a little bit closer to 64. Front run that 1272 fib extension, and the fib extension is based on this impulse. So I applied the Fibonacci tool to the following move here, and this is where I got my targets. Plus, we can look back at some range data from older price action. So we are entering a bit of a range, and 64 is, I'd say, close to a midpoint of that range. So, and of course, with the top target being just above 70, I might front run that number as well, being a round number, and go to say 69.80, something like that, just to be safe. But this is the basic idea of a trade that I would take if Bitcoin were to kind of calm down and choose a direction in the near term. Let's take a quick look at some of the meme coins, because I know a lot of people want to see those, and then we will probably bounce out of here for our Friday wrap up. Let's look at PEPE. Okay, so PEPE still looking strong. It is on an uptrend, higher highs, higher lows. Now look, these meme coins, you don't know when they're going to stop. PEPE's been around for a while though. It's got a lot of people behind it, so it would not surprise me to see PEPE continue. And as you can see, I do have some targets listed out from some earlier reviews. Decent fib extension here sitting at 1220. I would front run 1200, of course, because that is a round number, looking in the high 1100s. And then the next spot up would be around 1500, 1518 to be precise. I would front run that and go into the 1490s. So that would be some PEPE targets. Again, I'm not in PEPE. I'm not typically a meme coin trader, not my style. However, I know some people making a lot of money on meme coins. I know V the Gorilla told us that he was getting into PEPE almost a year ago, and now he has made times 10 his money. So PEPE is definitely profitable, and I will leave you all with Dog WIF hat. Okay, so Dog WIF hat, I have applied a Fibonacci extension on that as well, and what we're looking at here is a retracement to the 382. Let me take a look at the algos really quickly here. It does look like Dog WIF hat may need to gather a little liquidity before it goes up. So we're either going to look at price. If that is the case, by the way, if it does continue back up, we're looking at a price range right now, possibly not established yet, possibly in this kind of area, say it could be between $2.41 and say $3. That could be the range that it creates. We're going to see. It might be a tighter range. Time will tell. It's early to try and guess at what that might be. The other option would be a retracement to the 618, and then we would have to see how price behaves at that time. And of course, if that did happen, then it could always retrace further to the 786, and there is more liquidity down in that area as well. However, if price does resume upward, the upside targets would be around 404 and around 466, and as you know, I do tend to front run fib extensions. Okay, well, I hope this was helpful. Just a little chart roundup for a Friday, the end of the week. If you want to learn how to do these things, how to build algos, how to predict the price of things, come on over to algofactor.tech. You can always work with us and see how we are extracting money out of the market on a daily, weekly, or monthly basis, depending on who's trading and what their schedule looks like. And we hope that you enjoy your weekend. Remember, nothing we say is investment advice. Just a quick reminder, as we also remind you to come on over, trade your job, upgrade your life. We'll see you on the next one.